question. And if I remember very well, we had already done Roman 1 and Roman 2. For this question, August 2023, question number 3B. Do you remember we had done Roman 1 and Roman 2? Now we are doing Roman 3. The number of sandwiches to sell to maximize expected monetary value. Very, very easy. So remember, always, we shall have states of nature here. States of nature are the uncontrollable probabilistic events, and there are 3 probabilistic events, and there are 3 here: poor, fair, then we have good, and then I can see their probabilities. 30% is the same as 0. What here? 0.3. 30% is the same as 0.3, 0.4, and then we have 0. What here? Somebody 3, like that. 40% is the same as 0.4, like that. And then we have alternatives. Our alternatives here, we have 1,000, 2,000, 3,000, 3,000, then lastly 4,000. You don't have to draw this because I think you are drawn in our last class. Remember, our figures are in shillings, thousands, eh? Unlike the examiner, our figures, we are chopping the 3 zeros. We are chopping the 3 zeros. So we have there 100. We have here 300. 300. Then we have 0, 600, 600. Then we have minus 100. 700, 900, then we have minus 300, 600, then lastly we have 1,200. Lastly we have 1,200, like that. And then now they want us to use expected monetary value to advise. So expected monetary value means what here? Expectation. Expected monetary value means average. So to get expected monetary value, we shall take the X values times their corresponding probabilities. We take the X values for each alternative here. We take the payoffs, the profits, we multiply them with their respective what here probability, and then we sum expected monetary value. So like now the first alternative, I can see it is either I get 100 at this probability, so times 0.3, or with this alternative, I can as well get 300. So 300 times its probability, which is 0.4, or this 300 times 0.3. So is there somebody who can give me that answer? Expected monetary value. So here, I will be getting this 100, but the probability is 30%. So I only expect 30% over 100. Yeah, and you see there are 3 possibilities. I could either get this, or I get this, or I get this. So in probability, or means you add. That's why we are adding here. 240. So I'm being given a figure of 240. So then now with your kindness, are you able to give me the expected monetary value should I sell 2,000? Without writing anything. So should I sell 2,000, it will be 0 times 0.3 plus 600 times 0.4 plus 600 times 0.3. Give me an answer, somebody there. 420. So I'm being given a figure of 400 and what here? A figure of 420. I hope everybody is able to follow. Thank you so much, Jebet. Thank you so much. The online students, I would really want to hear from you. So like if we decide to sell 3,000, there are 3 possibilities. So now you take minus 100 times 0.3 plus 700 times 0.4 plus 900 times 0.3. You give me an answer. I write here. So according to Pius Nyanga, he's getting 500 what here? 20. 520. 520. And then very lastly, we have the last option here, which will be minus 300 times 0.3 plus 600 times 0.4 plus 1,200 times what here? Somebody 3, which then will end up giving me what figure? Somebody here? 510. So then what do you think about this expected monetary value? Once we have them, we shall always work with the very highest because money is sweet. The more it is, the better. So the optimal one will be the highest amongst this, which is what here, somebody? 520. So this is what we call the best expected monetary value. And if it is the best expected monetary value, then we are advising these people to sell how many were they burgers? What were they this? 3,000 what here, somebody? Sandwiches, yes. So the decision here, decision is sell this, which corresponds to that. Sell 3,000 sandwiches. That is expected monetary value. Expected monetary value. I don't know whether you guys have been able to follow up to here. Have they been able to follow up to here? Some, great, sure, great. So it's not a tough thing. Like last semester, they brought us this question, and so many guys were getting nothing, which was very unfortunate. And if you missed this question right, to get it right, you have to repeat. So then they want us, number 4, to give them the maximum amount. Yes. I write? Oh, you haven't written yet. Please try to write far. You want to write from the very beginning. Oh. All right. So then I give you 2 minutes. Yeah. And that will be, this one was the easiest question. The easiest question, yes. There are those questions if you miss and everybody else is getting right, automatically there is a problem then. And I hope you are able to see how I got these figures, eh? Yeah. And then we have settled on the very highest as the best expected monetary value. Expected monetary value. So I can see the online ninjas are only 98, and yet the class has over 350 students. Why are the other students not attending this Saturday class? Is it because you are not aware of the session? The online ninjas, remember the Saturday class shall be permanent. Saturday class shall be permanent. Given how, what did I miss? Then it's nothing much. We've just begun this. Remember in our last class, we had done this question, Roman 1 and Roman 2, eh? Now I've only done Roman 3. Roman 3, and it is expected monetary value, where basically you will take the payoffs that you have times their corresponding probabilities, eh? So you take this times this, plus this times that, plus this. For the first alternative, you have that number. You do the same. For the second alternative, 0 times probability is constant, plus. And then at the end of the day, you'll be able to pick the very highest what year expected monetary value, which is 500, and what year and 20. 520 being the best TMV, and the corresponding then quantity to sell is 3,000, like that. So ensure that you write as Mwalimu writes, eh? Yeah, so that we save on time. Or probably people are not aware, we should be able to put that session on the timetable. That's a mistake on our side, because that is a permanent session. That will really be important for us to put it there. Just like AFM. AFM, we have those students who are exempted in financial management. Those students who have been failing this AFM, for example, for 3 times, 4 times, we have a special class for them, which runs on Sundays for 3 hours. Sundays from 9, that is AFM, 9 to 12 p.m. every Sunday. If you are exempted from financial management, or if you did your financial management 5 years ago, 10 years ago, you have already rusted, yeah, you need to join this free session for you. That is advanced financial management. Now, with your permission, I will be able to go to Roman 4, the maximum amount payable by OREC Limited to acquire perfect information. To acquire perfect information. To acquire perfect information. So then what, first of all, is this perfect information? So it will be very important for you, ladies and gentlemen, to appreciate the formula of getting this expected value of perfect information before I explain what it is. So anytime they want us to give them expected value of perfect information, how do we get expected value of perfect information? Yeah, to get this one, we normally take expected value with perfect information minus best EMV. So anytime they want us to give them expected value of perfect information, we shall always take expected value with what? Perfect information minus the very best EMV that we have here. So then, first of all, before I even get to explain what this means, is there anybody who is able to give me expected value with perfect information? How do we get this expected value with perfect information? It's very easy. Remember, this expert is coming to advise us on the state of nature that will prevail. We are going to an expert who will be able to tell us, hey, from my experience, it is the poor that will prevail. So if he advises us it is the poor that will prevail, which outcome shall we go for here, somebody? 100, the highest, isn't it? Yeah, given information that it is poor that will prevail, we shall go for the very highest, for the very best here. So, ladies and gentlemen, whenever they tell you to calculate expected value with perfect information, go to each column identifying the highest. Go to each column identifying the highest. So like now column number 1, which one is the highest here? 100. Column number 2, the very highest is which one here? 700. Column number 3, the very highest is what here? 1200. So because this expert has been able to estimate and he has been able to tell us, hey, the state of nature to prevail will be poor. So I go to poor, select the highest. I go to fair, I select the highest. I go to good, I select the highest. Now with that, then I should be able to attach probabilities to them to get expected value with the PI. So expected value with the PI, the first number here is 100. I multiply this with the corresponding probability, which is what here? 0.3. Plus, I go to the second column. 700. So this 700, I will multiply this 700 with what here, somebody? 0.4. Plus, I go to the very last column where I will be able to pick what here, somebody? 1200 times what here, somebody? 0.3, isn't it? 0.3, like that. So expected value with PI. If I have perfect information that it is poor that will prevail, I will pick the highest. I pick the highest in every column, and then I multiply the values with what here? With the probabilities. So I'm being told here, ladies and gentlemen, that the answer is supposed to be 418. 418, 670. So 670. I'm told this is supposed to be. So with perfect information, the value I expect to get is 600 what here? 70. Then in this case here, what will be the EV of PI? So go ahead and calculate it for me now that you have everything. Please calculate this for me. 150. How have you gotten 150 for sure? Best is 520. Yeah. So it will be 670 minus what here, somebody? 520, because already we have best EMV. So it will be 670 here. The EV of PI will be 670 minus the best EMV, which is what here, somebody? 520, which gives me how much here at the end of the day? 150. 150. This is the expected value of perfect information. 150. So before I explain what this stands for, that 150, what it stands for, if you were to be asked a simple question, what have you understood out of this calculation? If you go to an exam and then you get an examiner asking you this question, what will you be able to remember? that first I will go to each column selecting what? The highest. So that very highest is what we are able to pick with information. So you select the highest and then you average it by giving us what we call expected value with what here? With the PI. So we had been able to get them. So we have gone ahead to multiply this with the probabilities summed together, giving us 600 what here? 70. So 670 minus 520 gives us what figure, somebody here? 150. It gives us 150. So this 150 now, for you to understand what it stands for, you will be able to write there that the 150 is the maximum amount which is payable to an expert. The 150, this 150 stands for, 150 stands for maximum amount payable to an expert. To an expert, yeah, to an expert for prediction of the state of nature, prediction of state of nature that will prevail, prediction of the state of nature that will do what? Yeah, somebody that will prevail. So the 150 represents the maximum amount payable to an expert for prediction of the state of nature that will prevail at the end of the day. So if this expert comes and tells me, hey, out of this, give me 200, will I accept? No, because the 150 is what here, somebody? Maximum amount. Ladies and gentlemen, all of us, we have used this concept of expert information. So you want to go and, for example, plant maize, yeah, in a particular area. If you're doing this large scale, then you have to visit the weather people. So these weather people will be able to give you information, whether there shall be rain or no rain. So they'll be asking for some fees. The fees that they'll be asking for is what we call expected value of what? Perfect information. And that fees basically should be the maximum amount which will be willing to pay to be able to acquire that information, which now is what here? Perfect here. So for you to be able to understand what I'm discussing about this evening, I would want us to look at some question here that some students were able to get nothing, 100% nothing, 100% nothing. Yeah, this one here, which is B, that is December 2024, question number 4B. December 2024, question number 4B. No, I can't understand that one. December. Linda, I have not picked yet your question. December 2024, question number 4B. December 2024, question number 4B. December 2024, question number 4B. So December 2024, question number 4B, do you have it? Do they have it? The online ninjas, have they been able to get it? The name of the question is lambda. Lambda. December 2024. December 2024. December 2024. Question number 4, what year? Question number 4B. We are told Lambda Investment Limited is a real estate firm. Recently, the company acquired a piece of land in a metropolitan area with prospective investment opportunities to develop. The investment center manager is to make a decision on which of the 3 mutually exclusive projects to invest in the next year. Each project is considered to be an investment center. The 3 investment centers are corporate offices, shopping malls, and residential estates. The projected annual payoffs per project under the 3 economic states of nature are given there. Required, the investment center to invest in to satisfy the maxi what year criterion. I would want to give you 5 minutes to try that question with your friend, isn't it? I'm so sure with your friend, that question is a question you can hammer down quite fast. With your friend, I want to believe that is a question you'll be able to get very fast. Not unless you have a bad friend. Or the students who are online don't have friends, eh? No, they have what to do. Remember, we are on topic number what? Topic number 3, which is a great topic because it has got key limiting factor. It has got throughput. It has got, in this case here, CVP. That is X break even, etc. Great topic. And of course, this pair of tables. This pair of tables. Is there somebody who is writing something, or should I just go ahead and solve it? You are doing it, eh? Yeah, great. How about the online students? Are you doing something? We are doing it, Kennedy. Thank you so much, K. Oh, this is a gentleman who came to my office, yes. Great. 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 December 2024. Martin Mwai. December 2024. Maxi. If I were you, I would chop those 6 zeros and then I have my figures in what year? Millions. It'd be easier that way. You don't have to keep on writing so many zeros in an exam, eh? If you keep on writing so many zeros in an exam, for sure, even yourself, you'll get a 0 in that exam. Can I give you some secret, ladies and gentlemen? Always, these kind of questions, ensure that your states of nature are at the top. And then alternatives. So you needed to transpose that matrix. Do you remember the concept of transposing a matrix? Yeah, changing rows to become columns. Changing rows to become columns. Changing rows to become columns. So that is what you shall always do. You can see the economic state, the states that the probabilistic ones are organized in column, which is wrong. So in this case here, we have our states shall always be here, and there are 3. They are optimistic. We have most likely, and then lastly, what do we have here? Somebody? Pessimistic, isn't it? Pessimistic. And then now you come and put your decision alternatives here. And we are going to decide between those shopping malls, isn't it? Yeah, we have in this case here corporate. Then we have shopping. And then what here, somebody? Residential. Then we have residential like that. So remember, we have transposed this matrix. So basically, my first column there will be my first row. So that column under corporate, so it's going to be like this. So I'll have the 100 there, 70 here, and then what here, somebody? So column 1 here has become my row 1 here. Column 2 will become my row 2 here. So we have here 100, what here, somebody? 110, 90. Then lastly, what there? 90. And then lastly, column 3. So we have 90, 120. And then what here, somebody? 70, like that. Now, when it is like this, you can very easily give us what we call maxi. Already somebody called Len has been able to get it. So, corporate, corporate offices. Yeah. So remember, number 1, they want us to give them maxi who? Maxi, which is best of what here, somebody? Best. So you can come and write here best of the best. So you write here best under every alternative. So if I go corporate, the very best is which one? 130. If I go shopping, the very best is 110. If I go residential, the very best is. So out of all these, which one is the best of the best? This Koya BB, best of the best. And therefore, if it's a maxi decision, maxi decision, as somebody told us there, that we should invest in what here, somebody? Corporate offices here. Invest in, because this is the one that corresponds. Corporate, yes. So up to there, ladies and gentlemen, all of us, are we really together? The online guys, are we together somehow? The online guys, yes. Thank you so much. Thank you so much. Thank you so much. And then now we can go to minimize expected opportunity what here? Losses. Minimize expected opportunity losses. So then we need what we call a regrets matrix. Probability, of course, they will be here. And yeah, because they were also transposed. But for part one, I don't need probabilities. Part one, I don't need probabilities. However, when I will need them, they have to be attached to the states. Like optimistic, I know it is 0.3. Most likely, I know it is 0.4. Pessimistic is what here? 0.3, isn't it? Yeah, so number two, they want me to minimize expected opportunity losses. So for opportunity losses, first of all, I need what we call a regrets matrix. Regrets matrix. Are you able to write for me the regrets matrix? Regrets matrix is very easy to get. It's very easy to get a regrets what here? The easiest, because you go to each column selecting the highest. So column number one, which one is the very highest? 110. So then using this 110, now you get regrets for column number one. So if I had not gone for 110, yeah, if I had gone for 100, I will say, I wish I knew I would have gone for what here, somebody. Then I will be regretting how much? The excess. What I never got, isn't it? So to get regret, what do? You identify the very highest, and then now to get the regret for this, you'll say 110 minus what here, somebody? What you got. When you come here, you will say 110 minus 110. Here you will say 110 minus 90. Yeah, so please ensure that so like now here I can wrap this because now you are following. So I've been able to identify 110 as the highest. So 110 becomes my benchmark for the entire column. So to get the regret here, I'll pick 110 minus 100, which I'm getting 10. Here it will be 110 minus 110, which is the no regret. How about the third one? I will talk of what here, somebody? 110 minus 90, which gives me 10 wongo. Where? 20, isn't it? 20. Is there somebody who is able to compute now regrets for column number two? Please try your best. Even if you don't get it right, I mean, so what? Just try. Because it's two rules, basically. Go to the column and identify the very highest. Identify the very highest. Thank you so much, Linda. Already Linda is at home. Already Linda is at home. For your case, you needed to have done another table, isn't it? Yeah, please do another table. Don't use a abracadabra like mine. Or you're using the same table. Or different pen. It doesn't matter. You need to do a new table. A new table. Regrets table or a regrets matrix shall always be a new table. New table. So then the very best in this case here is what here, somebody? 120. So meaning that my column number two, please listen and listen to me very well. My column number two shall behave like this. I will have 120, 120, 120 for column number two. And then I say minus what I got. So for column number two, what have I gotten here, somebody? 70 and then 90 and then 120. Which then will give me what figures? Here, somebody has already given me these figures. 50, 30, 0. So for your case, now you need another table. For my case, I'm okay because I'll come and just copy now the new answers here. the new answers. So we have here 50, 30, and then 0. So now we go to column number 3. Column number 3, now everybody should be able to get right. So column number 3, what do we have here, somebody? 130 is the highest, isn't it? So then I'll be able to do a working here for column number 3. So column 3. So column 3, the benchmark is 130. And there are 3, so 130, 130, 130, minus, minus, minus. So then the column 3 figures, what are they here? 130, 90, and then 70. And then 70, which then at the end of the day will give us what figures? 0, 40, 60, yeah? 60, thank you so much. So these are the numbers that I write here. So then we have 0, 40, and then lastly, what do we have there? 60, like that. And then of course, I don't know then what you'll do if you never made a new table. Now you need to come here and write expected EOL. Expected opportunity what here? Opportunity losses are the same as regrets, eh? Opportunity losses are the same as regrets. But whenever I use the word now expected, let me make this table of mine better. So we have here 10, we have 0, we have 20 there. So come and give us expected opportunity losses. Unfortunately, we have our probabilities. So yours will basically be to attach them. You fix them. Thank you so much, Robert. Langat, you're really working hard. Really working hard. So we have here 10 times point what here, somebody? 3 plus 50 times 0.4 plus 0 times. This is expected opportunity loss for the first decision. For the first decision, it's 10 times 0.3 plus 50 times 0.4 plus 0 times 0.3, which will end up giving us a what figure? Which will end up giving us what figure? It's only Ruth who is talking to me. She's telling me that the first answer is supposed to be what here? 23, isn't it? 23. 23. 23. And then now we go for the EOL for shopping. Shopping will be 0 times 0.3 plus 30 times 0.4 plus 40 times 0.3. This will give us 24. Ellen is giving me a figure of 24. Yeah, online wanafunzi wamechangamka pia sana. Wamechangamka kabisa. So 24, right? 24. And then the very last one is 20 times 0.3 plus 0 times 0.4 plus 60 times 0.3. Which will end up giving me what figure, somebody here? 24 again. 24, eh? 24 again. Thank you so much. So then in this case here, would you kindly choose the very best EOL? This must be 24, isn't it? Let me ask you a question. Then you guys have never regretted in your lives, right? Because regrets, you cannot go for the highest. Then you must be made of steel. If you're saying that 24, the very best loss, it's a loss. The very best loss is which one here, somebody? 23, the lowest? Yes. 23. 23. So this is the best EOL. This is the best expected opportunity. What here? Loss. So you're advising them to do what here? To put up? Corporate. We are advising them to put up what here? Corporate. Corporate. The answer is the same. Fine. Pious, there are many ways of killing a rat. So long as the thing you use is able to kill the rat, we are at home. Thank you so much. So somehow, are we together? We can never be together like 100%, but somehow. Wakati tunafunza adult learners, it can never be 100%. Kuna so many issues, isn't it? Kuna so many issues. Unaweza pata mwanafunzi hapa, kuna tala, kuna branch loan. Inafika time ana switch off, isn't it? But somehow, are you able to follow? Online wanafunzi hawaongei. Online wanafunzi hawaongei. Somehow. Thank you so much. Thank you so much. Kindly explain again. This is a loss, opportunity loss. The lower the losses, the better. the better for us. So the very least loss here is what is 23. And therefore, because 23 is the best expected opportunity loss, we are recommending what here, somebody? Corporate. So I hope your decision you have said there, your decision is to invest in what here? Corporate offices. Corporate offices. Corporate offices. Thank you so much. Right. Then now we should be able to look at the question that last semester, we get to see why were many students. No. We cannot handle that now. We shall overcome, right? December 2025, question number 1C. Question number 1C. December 2025, question number 1C. Question number 1C. December 2025, December 2025, question number 1C. The question of Makutano Junction. Junction cafeteria, are you there? Ah, great. Great. So the online ninjas, have you been able to get that question? Even if you don't get it, I'm sharing it here. We are told Junction cafeteria buys and sells hot takeaway food. It's a different question, right? It is the same, eh? Junction. Now, Makutano is my name. Yeah. December 2025, question number 1C. Junction cafeteria buys and sells hot takeaway food. The cafeteria wants to decide on how many burgers to purchase for sale at a forthcoming outdoor concert. The number of burgers sold will depend on the weather conditions, and any unsold burger will be thrown away at the end of the day. There is a 30% chance that the weather will be good, a 20% chance that the weather will be normal, and a 50% chance that the weather will be what here? Bad. The table below details the profit that will be earned for each possible outcome. So basically, profit table is the payoff table. Now, what are you able to see, first of all, about this table they have given me? Is it organized very well, or shall we be able to transpose? We shall transpose. We shall transpose. Because you can see the alternatives that we're going to be choosing from, of course, are the number of burgers to purchase, right? And whether bad, normal, good, weather is an act of God. That's uncontrollable. That is a state of what here? State of nature. So that we shall transpose. And so many students were not able to transpose. So they want us to give them the number of burgers to purchase to satisfy max-mini criterion, maxi-maxi criterion, and then mini-maxi what here? Criterion. Mini-maxi criterion. So remember, this weather, yeah, bad, good, you can see it is probabilistic. So go ahead, first of all, and transpose, because we shall always have the states of nature, the probabilistic events, yeah, being at the very top. Being at the very top. Being at the very top here. Being at the very top here. So we have states. So states, what do we have there? Somebody? Bad, normal, and good, isn't it? And then now we have our number of burgers. I'll simply call them alter. These are the alternatives that we want to choose one from them. So the alternatives are, what do we have there? 1,000, 2,000, 3,000, and then lastly, 4,000. Don't forget that we are transposing this. We are transposing this. We are transposing this. So transposing means that column, this column of 1,000, the first column there will be my first row. So row wise, so I'm writing this down row wise. So 1,000, 3,000, 1,000, 3,000, 3,000 again, 3,000 again. And then we go to row number 2. So row number 2 will be from this column to 0, 6,000, 6,000. Then we go to row number 3, which will be gotten from column number 3. Minus what here, somebody? Minus 1,000, 7,000, 9,000, 9,000, like that. Then we go to row number 4, which will be born from column 4. Minus 3,000, isn't it? So minus 3,000, 6,000, and then what here? 12,000, isn't it? Yeah. So the first one, they want us to give them the number of burgers to purchase to satisfy maximini criterion. So maximini criterion, that one, I'll be able to leave it for you. Maximini criterion. So maximini criterion. Maximini is best of what here, somebody? Worst. Maximini. And the first of all, we normally start by who? The worst, isn't it? So come and create a column here for the worst. Worst profit will be the lowest profit. Worst profit will be the lowest profit. Yeah, please, Knight, remember you have not been asked about maxi-maxi. Don't answer what the examiner. The first one is maxi-maxi or maximini? Maximini. You shall always answer what the examiner asks you. Always. So then the worst in this case will be 1,000. The lowest here. How about the very lowest here, somebody? 0. The very lowest here is what here, somebody? Negative 1,000. Which one? No, you can either write, no, just put negative like that. It's easier. Negative like that. If you're using a computer, then you put brackets. Next semester, you shall be doing BDA. Yeah. So then which one is the best of the worst? 1,000 here. So then what is our maximini decision? Yeah, purchase 1,000. Purchase, yeah. Purchase 1,000 burgers. Purchase 1,000 burgers like that. That's maximini, yes. I'm so sure without my help, you would have gotten this 100%. Is there any student who tried doing this paper last semester and they never did this? We shall overcome. Let's think about the future, isn't it? Let's think about the future. Why not negative? Yeah, the video will be uploaded, yes. Let me join, I'm traveling. Why not negative? 3,000. Why did I not choose this? You guys, when I'm wrong, you should be telling me I'm wrong. You see, we have another event here, isn't it? We have minus, but still, the very best is what here, somebody? Is 1,000. Thank you very much. Thank you very much, user. The very best will be 1,000 there. Then from there, we go to the second question that the examiner is asking us. Which question is that? Maxi-maxi, yes. Best of best. Already you have the answer. So best of best, so that is maxi-maxi. Maxi-maxi is best of best, and you shall always start with best, eh? So then what is the very best in this? 3,000. The very highest in this alternative, 6,000. The very highest here, 9,000. The very highest in this, 12,000 is the very highest, isn't it? So this is the best of the best. So remember, under best of the best, what do? Maxi-maxi. You go to each alternative, choosing the highest profit, highest payoff. So for this one, the very highest is 3,000. Very highest is 6,000. Very highest is 9,000. And then the very highest is 12,000. And then amongst all the best, now you only pick one, which will be the best of the best. Only one, best of the best, like that. So, and if you have advised this 12,000 is the best of the best, the corresponding quantity here is what we recommend. So maxi-maxi, purchase how many? Purchase 4,000 burgers. Purchase 4,000 burgers, like that. That's maxi-maxi. Maxi-maxi. And then now we have the very last one. The very last one, which one do they want us to use? Minimax. Minimax. So it is called minimax regret method. Minimax regret method. So meaning that first of all, from this table, you must create for us a regrets table. So please now create a fresh table, eh? No shortcut now. Give me a regrets table, all of us. It's called minimax regret in full. It's called minimax regret in full. So everybody is now giving us a regrets table. Minimax regret. Prayer, we have to pray always. Eh? How many minutes? 10 minutes. We come back at exactly 7. Always we shall pray. After all, we are going to Ramadan, so we can't miss prayer time. Pause recording. Is that why is Maxi and Maximini not giving us the same answers? They will never give us the same answers because of the different risk attitudes. You see, Maxi is for what type of people? Risk takers, isn't it? And Maximini is for what? Risk cover? Risk covers. They can never give us the same values. They can never give us the same decisions. All right. So are we finished the question really? The last one, they wanted us, what do they want us to do, the last one? Minimax. So first of all, we get the regrets, isn't it? Max mini or minimax regret? Because already we have done max mini, we have done maxi. Now we are doing mini maxi regret here. So for minimax regret, what do we need to do to identify? The highest in each column, isn't it? Which one is the highest in this column? 1,000. So this 1,000 then should be able to give birth to all the other regrets here. So we start with the first one. So the first regret here will be 1,000 minus 1,000, which gives me what here, somebody? 0. Here it will be 1,000 minus what here, somebody? 0, which gives me 1,000. Great. Here it will be 1,000, the benchmark minus 1,000. So which gives me 2,000. Here it will be 1,000 minus 3,000, which gives me what here, somebody? 4,000. So go to column number 2 and identify the very highest. 7,000, isn't it? So for column 2, 7,000, I'll be able to use it very well to get all the other regrets, because now 7,000 becomes the benchmark for the entire column. So I have 4 numbers. So 7,000, 7,000, 7,000, 4 numbers. So minus. For column 2, so minus 3,000, 6,000, 7,000. Then we have 6,000. So now I can comfortably rub this. 1,000, third one, 0, 1,000. So do you have all the other numbers now? Yeah, so if you have them, I don't have to belabor. So I just come and write all of them. So here, what number do we have? 9,000, 6,000, 3,000, 0. And then worst, what do we have here? 0, eh? 1,000, 0, 0 again. It is only, sorry. I went, this column, thank you. These columns are not supposed to be there. That is those columns are not supposed to be there. You're putting me in problems, isn't it? So now this is the regrets. So regrets, we also call them what here? Opportunity losses. Opportunity losses, yes. But remember, this time around, they don't want me to use EOL. No. They want me to use minimax what here? Regret method. So then how do I use this minimax regret? It's very easy to use minimax regret. Minimax max regret. This is what you do. You break down this into mini and max what here, somebody? Max regret. So shall be able to create a column here for maximum regret. Create a column there for maximum regret. Because we normally start from the second bit. So maximum regret, what do we have here, somebody? 9,000, eh? Here, what do we have? 6,000. Here, 3,000. Here, 4,000, eh? Is the maximum regret. So then after coming up with the maximum regrets, the very optimal will be now what here, somebody? Minimum. Minimum. Of which the very minimum here will be which one here? 3,000. The minimum will be 3,000. The minimum here will be 3,000. So this is what we call minimax regret. Minimax regret. So under minimax regret, what are we advising them to do? This is the answer, 3,000, yes. No other calculation. You don't use probabilities at all. Because we should have used probabilities if they asked us to get expected opportunity losses here. So in this case here, using minimax regret, we shall use what here, somebody? If it's minimax regret, we shall be able to purchase how many burgers? 3,000. So first of all, because I know some of you have gotten lost somewhere here, are we together first of all how the regrets were computed? The online ninjas, are we together how the regrets were computed? Were you able to compute them yourselves? Yeah, and then you come and remember minimax regret, start with the maximum regret for each. Maximum regret for each. Maximum regret for each. After getting the maximum regret for each, then you come and do what here, somebody minimize the exposure. You minimize, in this case here, out of all these, you pick the minimum. So I know you guys will be able to get time to practice, because it's all about now practice. It is all about practice. So then that is it. But you need to remember these methods as we get to the exam. We need to remember these methods. They are critical. We need to remember these methods. They are very, very critical. Yes, please. We don't have mini. Asante sana. We don't have mini. So we have in this case here what we call maxi who? Maxi. We have maxi what here? Max mini. And then we have mini max. And then we have expected what here? Expected opportunity losses. And you need to really know how to differentiate this. Especially with my years of experience, I know so many students confuse this and this. So many students confuse the two. So many students confuse the two. Maxi, mini. Then we have a mini max. So mini max, you must always remember to add what here, somebody. And then sometimes back here, student told me, Mwalimu, that if you want us to remember this, for mini max regret, be saying mini scat regret. I don't know what that student was talking about, but I'm so sure with that one, they will never forget. Yeah. Now a student is talking about here, what of those situations where questions now require us to construct what here? Our payoffs there. All right. So then we shall be able straight away to go to our management accounting booklet, the one that I've always shared with you. Sijawahi tuma hata siku moja. Aya. Sasa nitawatumia namna gani nyinyi? Na yeye ako nayo kwa email. Aya. But I'm lucky because I have Marion's email address, right? So if I send this to Marion, then I will be at home. I will not be having any stress. AMA complete syllabus. I have Marion's email address. Na huo mnasomaje bila hizo notes? It's Marion.Marion, right? Yeah. Kama Miguna. AMA complete syllabus. So please get the book and get to print it, eh? All right. So Marion, now the book is with you. How about the online students? Do they have the book? The summary notes, yeah. Let me now attach it here. Yeah, please confirm that also the online students are able to see the book. And once you get it, right away, go to page number. So the last part of this, nowadays your examiner will never give you payoffs. How will he give you payoffs and he's not your relative? This is not your mother. You know, it's only our mothers who love us best, isn't it? Wamekataa hiyo maneno. So the examiner will want you to construct payoffs yourselves, always. Go to page number 12. Page number 12. Page number 12. Have you gotten it? Aya. Page number 12. Haijafika hata kwake, imagine. Lakini uko na wifi. Na inakataa kufika kwa nini sasa? Ni hiyo, eh? You have it. Can I pick the book uko CBD? Where, Lucy? You want me to indicate the printing costs? Lucy wants mwalimu to indicate the printing cost. Lucy, hapana. Hii enda kwa boss wako uprint kwa ofisi. Because whatever you're learning is assisting your boss. Is assisting your boss. Is assisting your company. Revision kits, yes, revision kits are very, very important. Revision kits, you can always buy them, eh? Yeah, please. But you see what I'm sharing here is not a revision kit, eh? Umepata sasa, eh? Relax. Relax. This lady knows what she's doing. CBD, Commonwealth House. One page no. Haijafika paka saizi. Imefika, eh? Page number 11 now. Oh, imefika ukatuma pole pole. All right. Page number 11. I reshare. Okay. I reshare. Robert. And then, of course, some students here should be able to assist mwalimu sharing this booklet in WhatsApp group, eh? Robert, I hope now you have seen what I've shared, eh? Then remember the secret ya AMA haitaki haraka. Once tumefanya maswali kazi tumefanya, lazima uende urudie peke yako. Ukiwa peke yako jioni. Never assume that you have understood 100%, no. Always know that you have known nothing, and even the nothing you know it wrongly. Yes. Always. Cheers. Now everybody has this, and then we can now easily go to page number what here? 11. Page number 11, topic 3, short-term planning. The first question there is reading shifters what here? Haulage, isn't it? Shifters haulage, SH. Is considering changing some of the vans it uses to transport crates for what here? Customers. The new vans come in 3 sizes, small, medium, and what here? large. Have you gotten it? Page number 11. There are different things. What do you mean? Oh, it's page 12. Yeah, thank you so much. We shall wait. Page number 12. We shall wait again. Questionnaire shifters. Questionnaire shifters. Soma na huyu. It's easier that way. Yeah. It's easier that way. Page number 12. Yes. Umepata, eh? Page number 12. Page number 12. Shifters foliage. Tukaze kamba kidogo na tufanye maswali mbili, eh? Kaza kamba kidogo. Pata haraka. Neighbor kama party screenshot. Hiyo question tuma kwa group. Wataiona. Screenshot question itself. We Marion, hata soma kwanza hii. Share hii. Oh, okay. Mwambia kuja kaya hapa na nyinyi. Simu, eh? iPhone haitoi. Haiwezi enda hivyo. Not unless the book huyo ametuma different, eh? Yes. So shall we do the question? And this great lady will be getting the question as we continue. So shifters haulage is considering changing some of the vans it uses to transport what here? Crates for customers. The new vans, the new vans come in 3 sizes, small, medium, and what here? Large. Shifters is unsure about which type to buy. The capacity is 100 crates for the small van, 150 for the medium van, and 200 for the large van. So by the time a student is reading up to there, already kisungu imeanza kuingi. Anashangaa hii ni me ama tongue twister. If can tie, right? Demand for crates varies and can either be 120 or what here somebody? 190 crates per period, with probability of the higher demand figure being 0.6. The sale price per crate is Kenya shillings 10. And the variable cost is Kenya shillings 4 per crate for all van sizes, subject to the fact that if the capacity of the van is greater than the demand for crates in a period, then the variable cost will be lower by 10% to allow for the fact that the vans will be partly empty when transporting crates. Shifters is concerned that if demand for crates exceeds the capacity of the vans, then customers will have to be turned away. Shifters estimates that in this case, goodwill of Kenya shillings 100 would be charged against profits per period to allow for lost future sales, regardless of the number of customers that are turned away. Depreciation charged would be 200 per period for the small, Kenya shillings 300 for the medium, and the Kenya shillings 400 for the large van. SH has in the past been very aggressive in its decision making, pressing ahead with rapid growth strategies. However, its managers have recently grown more cautious as the business has become more competitive. Required, they want us to prepare now a profit table showing the 6 possible profit figures per period. How many marks? 9. And in August 2025, they gave us a replica of this question where they wanted us to construct a payoff table. Not many students are able to construct a payoff table, but fortunately, this semester, I have very, very good students who will be able to do. August, I'll come back to that one. Yeah, first we do this, and then we go to August 2025. So then it's a payoff table. So if it's a payoff table, we have our alternatives here. Which alternatives do we have, ladies and gentlemen? Yeah, small, isn't it? The type of van to buy. So we have small, medium, and then we have what here, somebody? Large, yes. Those are our alternatives. Let me use my board very well. These are my alternatives. So my alternatives. We have here small, medium, and then we have what here, somebody? Large. Is there anybody who is able to see the probabilistic states of nature? What are our states of nature? What are our states of nature? Why they are not talking to me? They would not have gotten this right. So states of nature here, these are demands, isn't it? And the demand could either be what or what? 100, 120, isn't it? 120 and then 19, with the probability of the large one being 0. What? And then therefore the probability of the small one will be 0.4. Not many would have interpreted this in an exam. Nimeandika juu sana. Nimeandika juu sana. I shall overcome. Nimeandika juu zaidi. Nimeandika juu sana. Yeah. So in this case here, we have our two states of nature, which is demand, which could either be 120 units, or in this case here, 190 what here? 190 units, like that. And the probability of this large one is 0.6. Probability here is 0. What here, somebody? 0.4. And then now the alternatives are here. We have in this case here small, medium, and then we have large. Small, medium, and large. Small, medium, and large. Allow me to read this pretty fast as well. There is a paragraph which I would want to have it sinking in our minds. If it doesn't sink in our minds very well, we shall not understand this. You can see this second paragraph. Second paragraph, the demand for crates varies and can either be what or what here, somebody? 120 or 190 crates per period. And remember, demand is not something that we can dictate as a company. Our sales is to go and sell our products down there. How many will be demanded is basically an act of God. It's a state of nature. And you can even see that the higher one has a probability of the higher demand being what here, somebody? 0.6. So you see now we are able to know that we have here, it's 120 crates, 190 crates, with the higher quantity having a probability of 0.6. So this probability will be 0.4 because the two probabilities must add up to what here? 1. Now, there is something else here. These vans also are coming with some capacities. Is there somebody who can see the capacity of a small van? How many crates? 100. How about medium? 150. How about large? Capacity is 200, isn't it? Yes. So then we have our cells. You can call this number 1, this number 2, this number 3, number 4, number 5, number what here? 6. Remember they spoke of 6 profits. Those are the 6 cells for the 6 profits. Now, as I wait for you to draw, we have 2 variable costs. We have 2 variable costs. Farida, are you able to see the board now? Farida, are you able to see the board now? Farida, are you able to see the board now? Are you able to see the board? Thank you so much. So tuko na 2 types of variable costs. Variable cost, tuko na variable cost. Variable cost. Yeah, 4 bob. Variable cost, yeah, 4 bob. So this variable cost here, 4 bob, is when our van goes to the market full capacity. When it goes to the market full capacity, we shall be incurring a variable cost of 4 shillings. And then we have another variable cost. There are 2 of them. There are 2 variable costs. There are 2 variable costs. Kuna variable cost ukiwa na macho ya ndani utaiona. Yeah, 3 point what here, somebody? 3.6. If in this case here, this van moves down partially empty. Partially empty. Nimetoa 3.6 wapi abracadabra? If it goes down partially empty, haitakuwa na uzito mingi sana kwa mguu. tutapata waiver ya 10%, meaning that our variable cost will be 90% of what? Of 4. What is 90% of 4? 3.6. Let me read this. Let's read this together because I don't want to leave anybody behind. We are told, ladies and gentlemen, here, the sale price per crate is how much? Is 10. And the variable cost is what here, somebody? 4. For all van sizes, subject to the fact that if the capacity of the van is greater than the demand, if the van is bigger than what it's carrying, if the van is greater than the demand for crates in a period, then the variable cost will be lower by what here, somebody? 10%. That means it will be at 90%. To allow for the fact that the vans will be partially empty when transporting what here, somebody? Crates. Once I have that, ladies and gentlemen, then I'm at home. Now, please, let's compare now this. Let's do, in this case here, mathematics for cell number 1. So first of all, cell number 1, what is the supply? For cell number 1. For cell number 1. For cell number 1. So cell 1, we have here supply, we have demand. So the supply is the same as capacity. We 100, isn't it? Yeah, 100. So supply is the same as capacity, and then demand is what here for cell 1? 120. So then what will be the effective units to be sold? Do we sell one? If you tell me sell 120, it means we are thieves, because we shall be selling what we don't have. You shall always compare supply and demand, and the lower one will be the effective sales. The lower one, always. So, ladies and gentlemen, what does this mean? It means that in this case here, we are going to sell how many here? Sell 100, isn't it? For this cell number 1. Then are you able to give me a profit amount which I'm going to realize? Should I sell 100? You guys are accountants, and I know measurement of profitability is what you do every day at your workplace. Not unless when a fake accountant. So any original accountant? Leo wamenyamaza sana wanafunzi. Wanafunzi wamekula lunch kweli? Hawakukula leo wameboeka sana. Leo wameboeka sana leo. Profit 100. Remember, it's revenue minus all the costs. It's revenue minus all the costs. So you're selling, can I guide you a little bit here? Let me guide you a little bit. So each crate we sell, what is the selling price? 10, isn't it? What will be the variable cost? 4, isn't it? Yeah, so this will be what we call contribution per crate. And you've told me we're going to sell how many crates here? 100. Now we need to make a decision. Here, are we going to use variable cost of 4 or 3.6? Why 4 and not 3.6? I use it specially because you can see that the demand is higher. So hiyo kavan katanda kama ni Mombasa, katanda kama kamejaza tap 100. Tumesema sell 100. Na capacity ni ngapi? Kanaenda kaka kamejaza. So tunatumia namna gani somebody? 4. But now there is one problem. Are you seeing us turning away some customers? Yeah, because the demand is more. The demand is higher. And whenever we turn away some customers, there is a goodwill lost. And the goodwill lost, which in this case we shall be able to charge in our income statement, is how much? 100. Is that 100 per crate or total for everything? Overall, let's read there. Let's read that. Thank you so much, Rina. Let's read there. Oh, you have seen it, that if we turn away some customers, we lose reputation. And the reputation we shall lose is worth 100, and this is given on the 3rd paragraph. SH is concerned that if the demand for crates exceeds the capacity of the vans, then customers will have to be turned away. SH estimates that in this case, goodwill of Kenya shillings 100. They're not saying 100 per crate. Goodwill of Kenya shillings 100 will be charged against profits per period to allow for lost sales. So in this particular case, let's be together here. Are we going to turn away some customers? Yeah, that's why we're going down full capacity. There are some 20 customers who will be turned away. So I must lose 100. Is that okay? There is another expense, the last expense that so many students will not be able to see. There is another expense. There is another expense in this question. I know why these students today, they are not that active. How I wish I had my phone here. Yeah, I know why. Today they're not active because Mwalimu is not giving presents, right? Goodwill, no, goodwill already we have charged the 100, isn't it? We have depreciation. Depreciation, they have given us depreciation for the small van. 100, somewhere, 200. So minus 200 here. Minus 200 here. So are you able to give me this profit? Abracadabra. Thank you so much, Mary Ann. Thank you so much, everyone else who has been able to come through here. So Martin Mwai ananiambia kwamba profit hapa itakuwa ni 300. Ni ukweli? Aya. So abracadabra, without any present, please calculate for me profit for number 2. Profit for number 2. Calculate for me profit for number 2. Profit for number 2. Like our last one today, Ana Furaha. Today, last born furaha imeenda wapi? Umechoka sana. Umekuwa na tax how many hours? Oh, I understand. I understand. I understand. We shall overcome. Imagine sikushtue. Just try writing something. Hata ukikosea, so what? So what? So what? So what? Somebody is telling me it is the same, eh? Sure. Let me wait. So many guys online are telling me the same, like my friend Dennis Dombi. The same. 300 or 500? But apotea abracadabra, you must say something. You must say something. You must say something. You must say something. Na kama unapata upate totally, unasema 0. In the process, they will correct us, isn't it? Unasema 0 in the process, they shall correct us. I can see like Al-Bashir is getting 300. Munyoki, 300. Rose M, the same. Joseph, the same. Same as L1. So you see the selling price per crate, not debatable. Ngoja tuende kwa cell 2. Ngoja tuangalia kwa cell 2. So cell 2, you see cell 2, the van is still small. And the number of units yet to be sold are how many? 190. So compare the two, and then of course the effective sales will be what here? The lower, 100. So we are recognizing here that we shall sell how many? 100. So I know the profit will be the same. Yeah, because in this case here, first of all, when I sell exactly my capacity, I'm going down there full capacity. So the variable cost will be what here, somebody? 4. So there will be 10 minus 4. I get contribution margin times the number of units I'm going to sell, which are how many? 100. In this case, I can see I'm turning away. How many customers here, somebody? Regardless of how many you turn away, you shall lose a goodwill of how much here, somebody? 100 minus depreciation for the small van, which is what here? 200 as well. So are you able to get 300, ladies and gentlemen? Then let's now go to number 3. This is where the rubber meets the road. Unajua kwa ndege ukiuko juu ni kuzurizuri. Meet the road, green. Unashtuka. Kwanza kama ndege ni ndogo, mama wanalia when the rubber meets the road. Where the rubber, not when, where the rubber meets the road. Yeah. Why 100 and not 90 customers lost? Here, we are losing how many customers? 90. But remember here, what have they told us? Even if you lose 1 customer, 2 customers, 3 customers, the goodwill lost is always 100, Mary Ann. The goodwill would be measured by the number of customers. So long as you disappoint any customer, that is what the question is telling us. The goodwill lost will always be constant at what year? At 100. SH is concerned that if the demand for crates exceeds the capacity of the vans, then customers will have to be turned away. SH estimates that in this case, goodwill of Kenya shillings 100 will be charged against what your profits. So even if you turn away 90, still goodwill will be 100. Goodwill lost will be 100. Number 3, mnapata? 240 from this corner. 240 from this corner. Thanks, Mary Ann. 340 or 240? Rina is saying 340. Rina is saying 340. Think. Do something. 468. That booklet down there has an answer. That booklet down there has an answer. The correct answer is supposed to be 468. Somebody is getting 668. Whose story do I believe now? Everybody is getting their own answers. Everybody is getting their own answers. 468, 300. Ama tukasirika tuweka 300 the whole table. 600 on Wrath, 468. 468, I think, is the one that is correct. Umekubali, eh? Or the answer is showing 468. But you got 268. Al-Bashir, 468. 468. International, 500. Even after the answer is confirmed. Farida says 440, and I love students who are always themselves. Yeah, Farida says 400, and Felista 468. So if everybody has tried it, it is a chance now for Mwalimu to do it. Can I do it? Chief Ninja, yes. Chief Ninja, yes. Now, this demand analysis, this one is so important. Don't do it without doing this analysis. So cell number what here, somebody? Cell 3. So cell 3, we have in this case here capacity, which is the same as supply. Ngapi, somebody? 150. And what is the demand for cell 3? 120. So in this case here, we sell how many? The lower. So we sell 120. First of all, up to there, is there somebody who got this right? You're sure? So we sell 120. So if we sell 120, what are you able to say about this van? Itaenda hivi yuko chini ikiwa nusu. Partially empty. Because you see the capacity van is what here somebody won. And yet it shall carry how many? So which variable cost are we going to use? Ile ambayo inasema kwamba miguu haitakanyaga chini sana sababu ni empty. Yeah. Kwa hivyo inamaanisha hapa itakuwa 10 minus what here somebody? 10 minus 3 point. Times how many crates? Times 120, right? The online ninjas up to here, are we really together? The online ninjas. The online ninjas up to here, are we together? Thank you so much. Kutoka hapo sasa utapata kaninja kingine kamesema mwalimu subtract 100. Hapo umedisappoint anybody? Umedisappoint any customer kweli? Hapo ukiangalia vizuri, ladies and gentlemen, what we are going to carry is 120 and the demand is exactly what? There's nobody who is being disappointed here. Actually, myself as the supplier, I'm the one who is losing an opportunity because I'm going down there partially what here empty. So here, don't subtract the 100 goodwill. I'm so sure somebody who got 268, they subtracted that 100 for goodwill. Here, ladies and gentlemen, we are satisfying all the, you can even check here. We are satisfying all the customers. So the only expenditure supposed to subtract is which one? Depreciation. And depreciation for medium van is not 200. It is 300. 300. It is 300. It is 300. It is 300. Which then will end up now giving us how much here? Mwanafunzi alipata kama alipata mara ya kwanza kabisa. Huyu jamaa si genius. Alifikiria, isn't it? Kwanza kujua kwamba sita subtract 100. Last born namchekelea kwa nini? Sio genius. Well, last born wewe. Why have you used 3.6? It's because, ladies and gentlemen, you can see here, this capacity of our van is 150. And yet it shall carry how many? So we shall be going down there partially empty. And the rule is very clear. The rule is very clear. What have they told us here? They have told us here that should we go down there partially empty, here, the sale price like that, and the variable cost is 4 pack rate for all van sizes, subject to the fact that if the capacity of the van is greater than the demand, the capacity here is greater than what here somebody, the demand, then we shall have a variable cost being 10% lower. So 10% of 4 is 0.4. So 0.44 minus 0.4 gives us what here somebody? 3.6. Hebu tuangalie hii ya number 4. Number 4 sasa na compare capacity ya 150 na demand ya let me give you a few minutes to try that. Wale mnasema ule si genius, sana nipatie correct answer. Wale mnasema ule si genius, nipatie correct answer tuone. 140 wamekataa. 500 aya. Sasa hii imejaa. Sasa that is a discussion I want to hear. Hii imejaa. Umesatisfy wote kweli? Kama imejaa we satisfy wote. 500 great. Winnie, Ivonne. Dennis hapo kwa 10 minus 3.6. Why not? You see, Dennis, what I want to do here, I know there is what we call contribution margin. From your management accounting, how do we get contribution margin? It is selling price minus what here, somebody? Variable cost. The crate, I'll be selling the crate at 10 bob, and the variable cost is what here, somebody here? 3.6. That's why we are saying 10 minus 3.6. Get contribution per crate times number of crates times number of crates. So then, is there someone who is able to get 500 and they are telling me, Mwalimu, this one, all of us are comfortable. Don't do it at all. All of us are comfortable. Don't do it. Let me be a bit softer. Is there anybody who want me to show you how this 500 came about? Is there anybody who want me to do and show you how this 500 came about? Zabu, yes. 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 So how do we get this 500? Let's try this. And now, fortunately, I know my students, this will be the last one that I'm doing, and now everything will be very clear. So cell number 4. So cell number 4. So we have here supply, which is the same as capacity. So for cell number 4, supply is how much? 150. And demand is how much? 190. Therefore, we sell the lower, isn't it? So we sell how many here? We are selling the capacity, isn't it? So when we sell capacity here, if you're selling capacity, for sure, I know that the variable cost that I will use will be for full capacity. Because I'm selling capacity, which is 150. So here I will be using 4. Therefore, my contribution margin will be the selling price per rate minus how much here, somebody? 4 times what here, somebody? Whenever I'm going down there full capacity, I know it's because demand is higher. So I'm going to disappoint some customers. Regardless of the number that I disappoint, my farm will have to lose how much here, somebody? Regardless of whatever is happening, I must charge depreciation, and this depreciation for the medium van, which is what here, somebody? 300. I suppose if you do it this way, you will end up getting what there? 500 now. Yeah. So then are you able to give me cell 5 and cell 6 right away? Cell 5, please give me cell 5. Cell 5 is 368. Cell 5 is 368. And then cell 6, I'm being told, is 800. Cell 6, I'm being told, is 800 and what here? 16. So please, if you're not comfortable, 816, you are not comfortable, ensure that Mwalimu is repeating this thing 100 times, because these are those kind of questions that shall not miss in arms. And we don't want someone to come gnashing their teeth, isn't it? If there is one you are not comfortable with, I'm always here willing to repeat. But if you are very, very comfortable, 368 I won and 816. So I think there is nobody who wants me to repeat or to substantiate any number there. They are comfortable. Now we can go to Roman number 2. But should you want me to do any between the two, always just raise your hand and tell me, Mwalimu, number, whatever, and I'll comfortably do it. I'll comfortably do it. But again, remember our philosophy later on, you shall still repeat the whole question as if you understood nothing. Don't assume you have known it. I will only believe you have known it once we get ourselves passing in all the papers and we are on our way to Masai Mara, isn't it? Yes. Otherwise, before that, you have known nothing. So part B, using your profit table from above, discuss which type of van SH should buy, taking into consideration the possible risk attitudes of who? Managers. We have 3 types of risk attitudes. Do you know them? Which ones are these? Oh, to go na AFM. Yeah, I'm finishing. So we have risk takers, risk averse, and risk neutral. So risk takers, we shall advise them using which approach? You wamesahau maxi, isn't it? Risk takers use, in this case here, maxi who? Maxi. And then we have risk averse. Risk averse, we shall advise them using ama ile ya miniscat regret. Uongo. Risk averse, we shall always advise them using what here, maxi mini. And then now we have, in this case here, risk neutral. Risk neutral, we advise them using expected monetary value. Risk neutral, you advise them using risk neutral. We advise them using expected monetary who? Expected monetary value. So is this now something you guys can do later on at your own time? Because there are students who have AFM right now. Is this something like Max, I'm so sure you'll be able to finish. And once you finish, send your final answer to our WhatsApp group. Is that okay? Wamekataa, wanataka tumalize kila kitu hapa. Yes. Wanataka tumalize kila kitu hapa. Yeah. And then, of course, the homework will be August 2021. August 2025, you'll be able to see a payoff table there. Question. Just go through the 5 questions, and then you pick a payoff table question. Otherwise, it has been a pleasure hosting all of you. See you tomorrow, the same time for AMA, isn't it? 6 p.m. for AMA. AFM at 5. Thank you so much. Physical, yes. I always do all my classes from here. When I go home, I don't carry laptop, nothing. I mark the last assignment. Yeah. All right. I'll be able to do that. Thank you so much. Please resend your answers for the last assignment. Resend your answers. FM ya kesho ni 9 a.m. 9 a.m. August 2025. Ile ingine, I can't even remember. Is it a free class? Of course, tomorrow it will be a free class, but now moving forward, we shall not be having free classes. Thank you so much. Bye. Wacha mtu aume kaugali kabla AFM. Mtu